You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. Well, the Fed followed through on their promise, 75 basis point increase in the Fed's funds rate with promises of more to come. Well, what effect is that having on your portfolio, on your investments, on your real estate? Well, let's sit down and talk with Debbie Bloyd, DLB Mortgage Services. And Debbie, welcome back. So what is the net effect of these higher rates in the markets that you work in?
So, I do mortgages, Kerry, and it seems that this is just going to make it harder for people to buy the size of home that they want at the price they want because it made their monthly payments go up. Now, some of the lenders have started factoring this pay hike in, this rate hike in last month. So some of the lenders already expanded their rates up. But then there's other lenders that are, very reactionary. And so we're going to see that pricing change today when the price is open. People just don't believe the fact that this is what's going on. It's crazy.
Yeah, well, we had 40 years of ever decreasing mortgage rates. Now I'm looking, the 30-year fixed's up to 6%. Even the FHA is up over 5.5%.
Right. And that's a big change for people. I don't realize that people don't understand that change is going on, but I don't think they knew how good they had it until it went away. Those rates of 2%. And I remember people saying, I'm not going to refinance at 2.5%. I think it's going to go back down. Is that not crazy?
Yeah. Nuts. But this is what we're facing. So you think it's going to slow the market down, or people will now buy lower than they originally anticipated?
I think they're going to buy lower than originally anticipated. If you have to move, Kerry, you have to move. So if you have to downsize from a 2-story to a 1-story, if you have to move across the country to be next to your grandkids or to be to your new work and they're not working remote, people have to go. So yes, last year you could have bought more for your money than you can this year. But if you have to go, you have to go. That seems to be, no one is going to move around now that doesn't have to. If you're not going to move just to get a better house in a better neighborhood if it's the same price, because it's going to cost you more.
All right. So what that does obviously increases the cost. It decreases the the quality of the home that you were going to get. And then,
yeah, of course.
Mm-hmm.
Yeah. So if you were interested in buying a $600,000 house, you may be down to $450,000 now. What you're going to see is that sellers, though, do have the option to help you make that difference up. So what a lot of people are doing, and so this all is like the perfect storm, Kerry. You had people that priced their house too high because everybody was buying everything like a crazy person. And so they priced too high. Now they're coming down if their house hasn't sold, and they're getting more competitive, which what they should have been doing in the first place. So instead of lowering the price by $40,000, they may give $10,000 in closing costs to the buyers. The buyers can then use this to buy down their rates to make it something more manageable, and they can still afford that house. So there is still a way to play with the numbers if everybody's willing.
Okay. And then you mentioned, we were talking recently about buying down your rate by paying more points up front.
Yes. So you could take those money where they used to say, just use this in closing costs for your setting up your escrow or your title policy or your survey. Now use that money to buy down the rate. So instead of a 6% rate, you could maybe get to 5%. That will put you back in the ball game, depending on your debt to income ratio. There are some families that just want to live at the top of that. So you have both husband and wife working. They've used both incomes to qualify for that house. They've got 2 car notes and various credit card bills. they can only afford what the computer lets them afford, right? Mm-hmm. So they're not going to be buying to their full potential. But if you buy down that rate, that means their buying power gets a little bit stronger. Still, they're limited on what they can do. You can only qualify what you can qualify for in your present state. And I think that's what everybody's upset about. They want more, but isn't that like us normally? We want more than we can afford.
I see. Yeah. So I guess it's new for a lot of the newer home buyers, but for people who've been out there for a while, right? They've been through this before, haven't they?
Yes, and it was different back then. So, you do have a really interesting mix right now of people that are first-time home buyers, but, that means they're 30-year-olds. They're waiting longer than ever to buy because they waited longer to get married and have a family. So now you've got 30-year-olds listening to 60-year-olds that are their parents that haven't bought a house maybe in 20 years. Times have changed. So there's still a lot of misinformation out there, even though the internet's alive and well. Everybody says they research and they Google everything, but that doesn't mean that it necessarily applies to them. So you really got to go to a mortgage broker, sit down, get your story out there. Let us know what we're working with, and then we can give you options. Your dad's options are not things that are happening right now. Mm-hmm. So there's that disconnect. Old school's trying to teach what's going on currently, and that doesn't happen. So we do have people looking for things like home equity loans and bridge loans. Right. Well, that's just a fancy word for hard money, because those loans aren't available anymore. So you have to change with the times, and a lot of people are kind of stuck right now.
Yeah. Well, I guess the other alternative is just to rent, right?
Yeah. And, rents are going up higher. I have 2 clients that are not going to sell their house and move out. They're going to rent their house and move out. And that way they can build some equity up, get some rent. They don't want to sell because they're in a great position and they want to keep that equity on the table. So they're going to rent out their house for the top of the market, live away from the house for a few years. But when they really want to come back, now they have more money in the bank. So more people are finding a way to squeeze out more money one way or another of their house. But rents are going up everywhere, over 20% for some markets. So even rent is getting really expensive, and you don't own anything at the end of the day. It's much better to buy small, do an FHA loan, keep it for a couple years, and then flip it.
Yeah, and then you'll be able to trade up, presumably, if housing prices are still going higher. Then you're going to have additional equity, and that can go towards the upgraded home.
Yes, I spoke with a gentleman yesterday, and he's like, I don't know why more people don't realize that they can make money on their house, sell it, and that $250,000 or that first $500,000 if you're married does not get taxed. Like, why aren't more people taking advantage of this? And I said, a lot of people don't like to move. It's very stressful to buy a house, to give me paperwork if you're not that kind of person. And so you're under a lot of stress. People don't like that, and they don't like moving either. So that's an easy way. You didn't like it when you moved. I move all the time. So I don't mind the moves, but a lot of people do. And so they would rather stay comfortable than make money. And I think we're going to see that is going to come back to bite them in the end, because a lot of people could have taken a lot of money off the table had they done it right. They just don't always ask for help.
Yeah, well, to me, moving probably takes 3 years off my life, every move. So at this point, if I was going to live to 100, I'll be lucky to live to 75.
Well, we don't want to put you under undue stress, but, a lot of people don't have their information organized properly, and they have a really hard time working with me because they don't keep the right stuff. They have no sense of organization. So when I give them the things that I need to make their loan move forward in the process and go through underwriting, it stresses them out. But no one teaches you how to do this, Kerry. I wish there was an adult class. When you hit 20, you had to take an adult money class, whether you were in college or not, that just tells you how to take care of your money and your credit and your files and utilities and what are the ramifications if you don't.
Hey, so, this is the kind of thing that financial planners really should go over with their clients if they're thinking about buying a new home. Some do, I know, but not all.
Well, and a lot of people, they ask the wrong people for help. I have one lady that she asked her cousin for help. So she did what her cousin said. Well, her cousin is not a professional in any of those categories.
Yeah.
And so she was led down the wrong road. And now I have to dig her back into the right direction, which means I got to turn that big boat around and reorganize all of her finances for her to be able to refinance. And it's stressful for her, but she got information from the wrong people.
Yeah,
yes, sir.
That happens. So one thing, though, we've really got a tale of two countries here. States that people are moving out of, cities that people are moving out of, and states that they're moving to, like your state, Texas, mine, Florida, Tennessee, Washington State, Nevada. In those states, what's the net effect in these states? There's still an effect from higher mortgage rates, but you still have increasing populations.
Don't just survive, thrive. The Financial Survival Network.
Osino Resources is a Ross Beatty-backed gold exploration company in mining-friendly Namibia. Osino's district-scale land package is situated near two producing gold mines, one of which Osino's management team previously developed and sold to B2 Gold. Osino's founders and management are experienced mining professionals who have already successfully developed and sold two companies in the past 7 years. Osino has a tight share structure, and with its current treasury, it can self-fund the advancement of its gold discovery into at least 2022. This is an exploration company with drills turning that you'll definitely want to pay attention to. Osino trades in New York under the ticker OSIIF and in Toronto under the ticker OSI. To learn more, go to osinoresources.com. That's osinoresources.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
Exactly. And depending on what state you come from and what your financial organization life is like, you may think this new state you're moving to is a much better deal, So if you are retiring and you cashed out of a 401k plan, or you have plenty of pension money or Social Security money, the interest rates aren't going to affect you of a lot. Yes, you're going to want all the bang for your buck you can get, but you're still going to purchase. If you're moving from a state that's lesser to something more expensive, you're going to get sticker shock. And renting is still not going to be the answer. But the real estate prices are going to continue to go up. Kerry, we said inflation last year. People have replayed me my interviews from last September and October, where I said your inflation rate is going to be about 10%. And they were like, no way ever.
Yeah, right.
Well, yes, way ever. It's really 10 to 15% now.
At least.
I said rates would be at 7%. And they were like, no way that's ever going to happen. Yeah. So, we've been saying all these things. They just didn't believe them. And so they did not take any steps to put themselves in a better position for when this happened. So if you're living in a state where people are leaving, real estate prices aren't going to go up as much because the demand is not as much. You've got two different equations. One side of the page is the interest rates and the Fed trying to slow our economy, which they're doing a great job of. The other half of the piece of paper is real estate, and real estate and cars. The durable goods are all getting more expensive, and that's because of inflation. So the houses are going to be more expensive. Your house is going to be twice as more expensive before you sell it as what it is now, because everything is going up in price. Yeah. So it has nothing to do with the interest rates. It has everything to do with demand in Florida.
Yeah.
Now, if you're in a state that people are leaving, you might get a really good deal because there's not as many people coming in. Competition is not alive and well.
Yeah. So you're kind of caught between a rock and a hard place. And unfortunately, many of you out there will just decide to do nothing, right?
Right. And that's a choice. And then you're going to be in a hard place the next time. So I do counsel a lot of families on, what is your 5-year plan? Let's put you in a good position in 5 years. And they're like, well, we don't even know what we're going to. Okay, well, then you're not planning for anything. So you're going to go with the wind. So what I try to do is make people be intentional, at least have a plan. Now, my plans don't always go right, but at least I have a plan, and then I can pivot to another plan. I'm always changing my plans, but every time you make a better plan, right? A lot of people, their credit's bad. They're not doing anything to affect it, or they've got money in cash, or they've got money in the market and they're not moving it, and they're putting themselves in a worse position because they're not making any choice. They're just sitting still, and that's never good.
Yeah. So doing nothing, as a business school professor used to say, is actually making a decision to do nothing.
Exactly. I have a lot of people sitting in cash because they don't want to be in the market. They think real estate is going through the roof, so they're doing nothing. But that cash, with inflation, that is 10% less than what they had before. They just don't see it yet. So
true.
Sitting in cash is not always the right way to go either. Put that cash to work for you.
Your cash could be trash, for sure.
It could be.
The way things are going. But I do think it's interesting. It really shows you that all real estate is local. When you think, hey, if I want to buy a house in Detroit, the prices are going down. I want to buy it in Miami, they're still going up.
Right. But if you buy that great offer in Detroit, who's going to rent it? Right. So if no one's moving in, then your rents aren't going to be that great either. So, you've got to figure out, I would rather buy in Miami where it's expensive, but I know it's in high demand, because then that's going to make my rents go even higher. Exactly. A lot of people have bought homes in Arizona, Phoenix especially, and most of the Scottsdale area is turning into an Airbnb mecca, because people are figuring out that you can rent it to the snowbirds, you can rent it to Airbnbs, and you can charge top dollar and make money. There's not a lot of residents living there. There are a lot of visitors living there. But does it matter to the people that own it? No, because they're cashing in.
Yes, totally.
So you just have to realize, are you on the cashing in side? And then you have to follow the trends. You may pay more, but you're going to make more in rent.
Yes, agreed.
More is always better.
Yeah. More is better.
More is always better.
And there's an inevitability, whatever the market's doing. Well, at some point they'll be cutting rates. When they do cut rates, then you're going to see real estate prices start going up again. I mean, it's just... Well,
that's exactly it. So you've heard it on the internet everywhere and all social media as people are saying, marry the house, date the rate. If people realize that this isn't the rate that they have to hold to for 30 years, that's not what we're saying. Most people refinance. At least my clients are refinancing with me every 5 to 7 years. Because something happens in their life, Kerry, that they need to take money out of their house. So a lot of my clients use their home equity as a cash register. Maybe they cash out when the market's high like it is now. They take that money off the top and they go buy another rental property, or they pay off high interest rate credit cards or student loans. There's always something to do with that extra money. So if you truly believe that the real estate market is going to go down, take the profit off the top now. We see a lot of people refinancing to take that cash out.
Sure. All this has been done before. We've seen it many, many times. There's nothing new under the sun. And, you're not living in the home that you're going to be able to afford 10 years from now. You're going to live in it now. And that's really what it comes down to, right?
Well, I see so many families that are seniors. So I'm talking 70 and above. And they've lived in this home for 20 years, but it's too big. When they start getting older, they can't go upstairs anymore, or they don't want to, or no one's coming to visit, or it's in bad repair, or they need additional help in living their normal life. So they need to move to assisted living. So then their house becomes cash again. So I do a lot of reverse mortgages for that reason, to get cash out, because eventually all you need is the cash flow. You don't need the asset. You need the money that the asset brings.
Exactly.
So when people say it's their forever home, I kind of just smile, because I know, at 70, it's not going to be their forever home. But they're not thinking that far in advance, right?
Yep. No, you have to take the long view of things. Sometimes it's not easy to do because we're living now. And hey, if the house satisfies 80%, 85% of your needs now, and then it'll enable you, hopefully, to get into a better house in 5 years. That's what you got to do. Or perhaps you'll downsize after 5 years and you'll have that much more cash, right?
Well, so, I had a bigger house when my kids were home and they were in high school. We had all their friends over all the time. My son played football. My daughter played volleyball. We had kids at my house round the clock. We had a big 2-story house, and it was just flooded with people. I bought as big a house as I could buy. And now they're in college I've downsized to where I'm in a townhouse just my size because I'm paying for college, and they've informed me that they're not coming back. They're going to travel the next 10 years and do their life. So why do I need to put all my money into a great big asset when I know I would rather spend it doing other things?
Yeah.
So
exactly.
you have to ebb and flow. And some people buy the one house and they stay in it for like 25 years, but their finances change. They just don't change as fast. So this is what people say is a very fluid time for when people are reorganizing their finances to put them in a really good position moving forward. So think of where you're living. Think of what you plan on doing the next 10 years. And if you're not in alignment with that, then now's a great time. You can sell your house to people that are moving around the country that need it. Always sell when there's great demand. And we have great demand, even though the numbers are down. The numbers say that, there's no new mortgage applications and everybody's freaking out. Well, my clients, they leased an apartment 6 months ago because they could not compete in buying something. They kept losing every deal, and they had to move their family into something. So the desire for a new house is not gone. They're just tied up in a lease now till next October. They'll come back around. And now the home builders, you can get great deals on some of these homes because they were not finished when the demand was there and they needed to be. And now that they're finished, all those people are in leases.
Yeah. Well,
so now's a great time to buy, but builders have incentives this month that they didn't have last month.
Yeah, exactly. Well,
you got to catch that curve at the right place, right?
You got to catch the wave, and the wave's either going to go, you're either going to miss the wave, it's going to go over you, or you're going to ride it. So you kind of have to decide which one it's going to be.
And it all takes effort. Yeah, you're right.
Yeah, for sure. So, hey, Debbie, people want to connect with you, want to find out more about mortgages. Where do you call home these days?
I call home dlbmortgageservices.com. So that's my website. I'm on Instagram and Facebook and TikTok under the Dollar Diva. And then I have my radio show that I do, moneystrategieswithdebbie.com. So you can find me at any of those places, and I would love to help. I started doing coaching now for clients all across the United States since I'm just licensed in Texas, but I will be happy to talk to anybody and try to put them in a better position.
Hey, and you know what? The advice can be priceless. Mortgages, you can get them anywhere you want, but you got to figure out what is going to work best for you, how you actually pull this thing off here, Deb. Well, we always enjoy speaking with you. If you've got a question for Deb, you can always shoot me an email, kl@kerrylutz.com. I'm curious. Tell me your experience, how higher rates are affecting you, how they're affecting your home choices if you're in that position now. And while you're at it, go to the site, financialsurvivalnetwork.com, and make sure you sign up for your free newsletter. Deb, always a pleasure. We'll talk to you again real soon.
Thank you. Have a great day.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.